So I'm just going to give people another minute to come in and we'll get started. And if you just arrived, if you can type in the chat box your name, the city you're from, and the industry that you represent. Okay. Well, I'm sure more people are going to trickle in later, but we'll get started. We want to respect your guys' time. Welcome to the webinar. My name is Brian Morales on behalf of the Filipino Chamber of Commerce of Alberta. I want to welcome you guys today. We have a big webinar event. Everyone's, I hope, home safe and quarantining themselves. This is part of the beauty of webinars. We can do this from home on our computer or iPad or phone. I'm just going to go over some quick etiquette if you just came in. We're going to keep the speakers muted. We're going to go for about an hour long. If you have a notepad and paper or laptops, take some notes. I'm sure they're going to have, you're going to come up with some questions. And to save your questions for the end, we're going to introduce the three speakers. They're going to introduce themselves and a little bit about the work that they have. If you have any questions, you can always raise your hand. We'll go over that when we get to the Q&A section. Our primary purpose today is to connect with you guys. I'm one of those that have been affected. Maybe your primary source of income is indefinitely in question. And what we want to do is gather together the Filipino businesses all across Canada, or Filipino at heart businesses all across Canada. We want to provide support and hear from you guys. So we've brought in a lot of expert panelists and speakers to talk with you guys. So I'm going to bring them in right now. And just to introduce to you guys, I'll just bring some spotlights. We have first up the board chair for the Filipino Chamber of Commerce. He's the district VP of the largest asset management firm in Canada. He's also a former director, VP, and other leadership roles in 4 of the top Fortune 500 companies. Mike, if you just want to give a quick wave and say hello to everybody. Thank you, and he'll get started. And then we also have Rodel Jimenez, 13 years in the mortgage solutions for hundreds of families throughout Canada. He's got a proven track record, multi-award winning mortgage broker, among the top 20% in the mortgage group here in Canada. He's been in the front lines kind of talking to his clients, asking about what's happening here with the industry of mortgages and what to do. And he'll be talking to you guys about the mortgage industry. We also have from the Business Development Bank of Canada. Sorry, let me just show you the quick pictures of everybody. We're gonna have Rodel Jimenez. There's Rodel, do you wanna say hi? Quick wave. And thank you, Rodel. And we also have 𝐿𝐺𝐻𝐿 Chahal, again, like I was saying, from the Business Development of Canada. He's over 6 years of experience with them. He was right in the middle of the government changes. So as the government was announcing all the changes that we're doing with the relief package for business owners all across Canada, we're really lucky to have him. I know he's been on top of things, trying to get everything together, and it goes day by day, almost hour by hour practically. So we're really lucky to have him here on our webinar today. He's going to talk very briefly. So I want to start with Michael Siervo. He's going to go over some of the information that we have today and some of the input that he's experienced over the past couple of weeks. So Mike, please take over the webinar.
Hello, can everyone hear me okay? Thumbs up if you could hear me. Okay, guys. So first of all, thank you so much, Brian and Chamber of Commerce for taking the time to do this. Everyone, I hope you guys are safe. I hope you guys are in your homes. And really what I want to talk about, when I get into conversations about so many different things, oftentimes, of course, it's going to be about COVID. But depending on where you are and what type of business you're running, that conversation can go so many different directions. So for today's purposes, I'm just going to put my investor hat on. The reason why I bring this up is because one, I know 𝐿𝐺𝐻𝐿 and from BDC is going to really talk about some great stuff. So I'm excited to hear from him as well as Rodel. But what I want to talk about is more so economics of what's happening currently in the market, what we're seeing, and as investors. And this is primarily because not only have your businesses been impacted by what's happening, but your savings has been impacted, your investments. I know for me, I've been impacted, just my overall retirement has been impacted. So, here are some of my thoughts that when I take a look at this, with the recent spike in the market, we're witnessing something we've never seen before. And I've been in the business for the last 20 years. And in just 2 months, we essentially wiped out the returns of over the last 4 years. And that's huge when you start to think about it. Now, we've had so many pandemics in the past, and some of them have been tied to viruses. Of course, I know if you're reading this, you've heard of a Spanish flu and all these other different pandemics, but this is a little bit more impactful. So, you know, what we're seeing is that the market is initially reacting, and it didn't react as much as we thought it would react until it spread outside of China, Italy, and of course the United States. So what we're experiencing now in my world, in the institutional investment side, is that we're seeing the economy move into more bear market territory. And that's really defined as anything of more than 20% drop. And this is the fastest we've seen in history. So it just literally just took 15 days. And what's more alarming is that we're seeing moves in the market of 1,000 basis point swings in the market, and that's becoming normal. And that's tough, especially if you guys are near retirement, or if you know people in retirement. A lot of us here are younger, but we have parents, and all of a sudden how they're viewing their investments is quite scary. So really no market was spared, and even the bond market and yields were acting quite weird. I just want to touch quickly, I was looking at oil prices, and you could buy a barrel of oil for the cost of, same price as how much it would cost 2 people to eat at Starbucks. You know, 2 venti lattes and 2 turkey paninis is probably the same price of West Texas, WTI price of oil, $22. So, you know, this is also due to the war that we're seeing, the oil trade wars between Saudi Arabia and Russia. But, you know, given all this turmoil, we're seeing just a lot of volatility in the market. So when you're talking to a lot of your friends, a lot of us having these conversations, they will likely ask you, what will really calm this market? So initially you thought, okay, well, maybe if the Fed's cut. Well, the Fed's cut interest rates by 150 basis points in just 2 weeks. And really it did nothing. And that was huge. So what we're really waiting for are 3 things. One, we're waiting for massive stimulus across all countries, not just Canada, not just the United States. We need to see that. And we're seeing some of that happen, but we need a little bit more. So we need 3 things to happen that I believe that we're going to be on the right track. So that's one, massive stimulus. The other one is the containment of COVID in Europe and in the US. Of course, Italy is a poster child of what's could happen to us. I talked to a lot of people there in Toronto. I know that there's some people there. I know Rachel's there in Toronto, and it's a lot rougher there than it is over here in Alberta. And so, you know, Italy is a poster child of what can happen. And then 3, we need some economic progress coming out of China, primarily out of China. So China was the first one to be impacted, and they will be likely the first ones out of it. And the reason why this is important is I know that there are a lot of people online who are now starting online businesses. Oftentimes, China will be the fulfillment center to get those online businesses going. T-shirt companies, printing companies, whatever it might be. So as soon as we see China starting to get out of that funk, and we're starting to see them get back to work, that's when we know that we are near the tail, near some type of recovery. But you know, in reality, if I were to give anyone here advice on what I'm doing, I am looking for more opportunities to invest. If you do have some cash, I would sit on it just for a while. A lot of investors are saying now is a great time to buy. I respectfully say no, not yet. I think it could go even further. I think what's priced into the market is just sentimental risk. And once we start to see earnings coming down and being reported, we're going to see the true extent of how badly we're impacted. However, there are some opportunities that you guys need to start taking a look at, the relationships with companies that you're looking at. I personally don't think Canada is the greatest place to invest, primarily because we're a price taker, not a price maker. So I'd rather look at companies like Netflix, Amazon, Disney, Visa. You could get them at discounts. It's tough because you're seeing airlines, hotels, and tourism all take a bit of a hit. So, I mean, in a nutshell, it is scary. This pandemic is in full force. The action that we did see in the Feds, we saw that happen. We saw a drop in oil. And the question really is the bad news already priced into the market? I know that I've already experienced a hit in my portfolio. and it's tough to say. I would say that the truth is we are in uncharted territory, and we're still learning. We're really in discovery mode. I don't know how long this will impact us long term, but the fact that I'm where I was 4 to 5 years ago and I lost those 4 to 5 years of growth is a hit. I'm not getting any younger. And so we need to start being a little bit more prudent. I'd probably start reconsidering my risk tolerance as you get older. But you know, we don't really know the extent if the worst is already priced in. So I don't know. Potentially there could be again, I've been hearing our portfolio managers and analysts talking about second mutations of the coronavirus, and that's how it's going to impact us. I just want to quickly mention one thing, Brian, that a lot of people who are investing will tell me, well, we've been through this before. We went through 2008. I'll be honest with you, I was standing on the floor of the New York Stock Exchange when the market dropped in 2008. And I'll tell you one thing, it's very different. 2008 was tied to a structural problem, tied within a banking crisis. And what we're seeing right now is more an event-driven pandemic, which is global in nature, and it's impacting the supply side of consumers and the demand side. A lot of us are quarantined, so there's no velocity of money. And that is where I see this big difference between how we are now versus 2008. So when will this end? To be honest with you, I don't really know. We're still in discovery mode, but I certainly think we have to be prudent. I would hold a little bit more in cash if I was a business owner. And if you do have the opportunity to take a look at some type of lending facilities, I know that Rodel could likely talk about it, but the 4 that I see often, talk to your banks right now. Is probably, and you know, the BDC is the same thing. Everything's up for negotiation. If you talk to your lenders or your landlord, no one's going to blame you for trying to negotiate your rent payment or your mortgage payment. So I would say it's our responsibility to be able to do that. So, you know, with banks, we take a look at term loans. I'm not a banker, but I've been going through all the different options. Term loans, 1, 3, 5-year term loans. They can't be replenished over time, but that's specific for a particular need. Take a look at revolving lines of credit, which can give you some working capital. If you're a little bit more sophisticated, they're factoring products. So if you're making, let's say you're generating over $3 million of revenue, here's a great option for you guys to be able to essentially get a loan and collateralize your accounts receivable. So take a look at something like that. And then another thing that's come out over the last couple of years, over the last 5 to 6 years, is alternative lending. So I'm hearing more of that. You know, take an asset, you have some private lenders who have a lot of money, they'll charge you a little bit more, maybe 2 to 3% a month for short-term bridge financing. But what I want you guys to think about right now is to be as creative as possible. Everything's up for negotiation. And I would advise you to start talking to multiple different lenders, ask what they're looking for, and get all your paperwork in order. I know that the BDC has some great programs there. I've looked at their stuff. So Brian, hopefully that made some sense. Give you a quick rundown as to the investor perspective, what we see in the market as institutional investors, as well as one of the biggest concern, and that's financing. So take a look at those 4 financing options: term loans, revolving line of credit, factoring products, and alternative lending.
Thanks,
so
Mike. I think
5 minutes.
Thanks, Mike. I'm sure there are questions that are going to come up during the Q&A, and those are great points to start with. I already wrote down some questions, so but we'll get right to Rodel. Again, he's over a decade of experience in the commercial and residential mortgage market. He also does small business loans, and he helps people with that. Writes your business plans as well. So I'm going to spotlight Rodel. Please take the floor.
All right. Can everybody hear me? Yeah. All right. Thanks for the invite again, guys. You know, I'm not going to go off a whole lot on the commercial side. I think Jazz is likely going to have to chat a little bit about some of the products that he offers. On the commercial side, for me as a commercial mortgage broker, I facilitate and I help my clients put their proposals together for banks like BDC, any of the institutional lenders, ATB. You know, whether it's a Canada Small Business Loan to an operating line of credit of $100,000. You know, I can help business owners facilitate that, because sometimes when you walk into a bank and it's not really your forte to put a proposal together for a bank, your chances are probably better using a guy like me because of the relationships that I've built over the years. So on the residential side, I'm sure there's going to be a lot of questions about this, because most of us, I'm sure here, have mortgages, whether they're from your home, you own some rental properties. The big question is always, can I defer my payments? How do I do that? Who do I talk to? Now, because we're going through such unprecedented territory, we've never experienced this, as Mike talked about. Everything that we're hearing is new. Everything that's happening in the market from a mortgage perspective is just happening in the last couple of weeks, right? So payment deferrals, the change in lending policies. As of today, and this isn't even really public news yet, but the banks decided with the government and the mortgage insurers, so there's CMHC, Genworth, and Canada Guarantee, who insure mortgages, residential mortgages in Canada, they decided that anyone that has written an offer on a home, residential property, that has a firm sale as of just yesterday, they will allow them to continue with that transaction, regardless of them working or not. And so I actually today lost a deal because of this. During all of this chaos in the last couple of weeks, a client of mine was recently approved by one of the lenders for the purchase of a home. And as we are putting their file together with their conditions, such as their letter of employment and pay stub, we were running out of time because the lenders are so backed up that there's delays everywhere. So typically, to review documents with lenders, they take anywhere from 24 to 48 hours. I'm seeing like 4 or 5 days for these lenders to approve you. And then when they review your documents, it's another 3 or 4 or 5 days. And so because of these delays, I had a client that had to waive their conditions just yesterday, but they couldn't because they weren't sure if this new government ruling would allow them to continue with the transaction. So imagine this: you write an offer on a home 2 weeks ago on a home, you put your $10,000 deposit down, you get the approval, you remove the subject, so meaning it's a firm sale. You get laid off. You're no longer working. So if your sale is not firm on the 25th, which was yesterday, they won't allow you to use your income. And so in my client's case, they couldn't waive the conditions because they weren't sure if that lender was going to allow that policy. Well, they found out just today that they accepted that policy, but because they didn't waive their conditions, that deal it's almost dead. So the whole point of that is that with everything that we're going through, nothing is set in stone. Mike said something about, well, abnormal being normal now. It really is. It's so volatile right now that you can't expect a traditional transaction to go as smoothly as it did in the past, because it won't, whether it's a commercial mortgage or a business loan to a purchase of a home, a residential transaction. You have to be very diligent and very careful now of any major purchase. So if you or anybody you know, or you're looking to purchase real estate, whether it's commercial or residential, be very careful. I would say if you do, use a broker. There's value there, not just to get the lowest interest rate, but because we as brokers, we are usually the first ones that are notified by the mortgage insurers and the lenders of any key policy change. And so with that information in hand, upfront as quickly as possible, that'll help mitigate putting yourself in a situation where you lose your deposit, right? Because there are people losing their deposits right now, I would think, because of this new rule. And that's scary. Like I said, imagine that's you putting a $10,000 deposit down, and then all this happens, and now the lender's going to pull the plug at the last minute because you're not working. Well, You want to make sure that you don't do that. And the other thing that I want to say is that because it's so volatile, because we don't know where this thing's going to end up, the one thing that you want to avoid right now is if you're going to build a home. When you build a home and you purchase a home, there's that timeline of when you write the offer to the time that you move in. Usually it's 6 to 8 months, sometimes 10 months, depending on the builder. Typically, we get the approval up front. It's good for 120 days with most lenders. And then we reapprove the clients usually 1 or 2 months before the possession date. And so that time frame, so much can happen, especially in an economy as we are experiencing right now. There's going to be more mortgage rule changes. There's going to be, interest rates. I mean, the interest rates in the last few weeks, due to the markets, as Mike mentioned, they've kind of gone up and down. The Bank of Canada did reduce their overnight lending rate. In 2 weeks, they 1.5%, which is huge. Now, the effects of that was that the 5-year fixed rates went up because the Bank of Canada rate affects your variable rates. And so the variable rates were actually going down at that time. Whereas the inverse, the fixed rates, they were going up because the 5-year fixed rates and the 7-year rates and the long-term rates are affected by the bond market. And Mike, you can attest to that, what the bond market was doing in the last couple of weeks, it was shooting up, right? And so you think that usually in a time of recession, the interest rates tend to go down, right? But like I said, they went down for a bit and then they all of a sudden shot up, right? By at least 0.25%. Some lenders increased their fixed rates by 0.5%. So just getting back to the whole abnormal is normal. That's kind of what you should expect anytime you're dealing with any mortgage transaction. Now, what would I suggest to do as well as not build a home? I mean, if you build a home and you want a brand new house, I would say look for a spec home, right? Spec home is where, it's a quick possession home because the time frame of you writing the offer and moving in, I mean, you can be a month away and you can move in and have your mortgage in place. You don't ever want to have a transaction where you start it here and then 3 months, 4 months down the road, you have to requalify. Because that's the thing, you do have to requalify with most lenders, usually 30 days before the possession date. And if there's some sort of mortgage rule change, or if the market value dips, which it likely is going to continue to do so, that will affect your approval at the time of reapproval again. So for example, you purchase a house today at $400,000. That home is then built and completed 6 months, 8 months down the road, but the market had dropped. The contract that you signed with the builder at the time of the contract is based on the current market value at that time. Now, if the market dips, you requalify 1 to 2 months prior, they're gonna base it on the current market value. So if your market value has dipped $50,000 on this brand new home that you wrote an offer on 6 months ago, the lenders are only always gonna lend on current market value, not the value that you had purchased it on. And so I've had clients back in the 2008 recession that happened to them exactly, and you have to cover the shortfall. That one client, he had to come up with an extra $80,000 because the price of his home dropped so much during that time. So just one thing to be mindful of as well when you're purchasing and you're building a home. The other thing is the payment deferrals. If you can do it, you should ask, because as business owners, you don't know where your business is going to go. It's a snowball effect, as you guys all know. Some lenders will allow you to do it without verifying financial hardships, from what I hear. Some will. As business owners, I'm thinking that it's going to be more difficult for guys like us to apply for a payment deferral, but you don't know until you try. So as Mike said, talk to your banks. There's going to be relief programs there out for business owners, employees. So anything that you can defer. You can also defer your car loans, right? Some banks are allowing that as well. Credit cards, talk to your credit card company, ask them if they can defer or reduce your interest rate. they might do that, right? Again, I don't know, but like Mike said, anything's negotiable right now. So other than that, I think I spoke a little bit longer than I should have, but I think that's all I have. And so I guess if you guys have any questions, we'll ask at the Q&A. So thank you.
Thanks, Rodel. I think it's been reflected by both Mike and Rodel. I mean, there's big, huge, massive changes, but I think as small and medium-sized business owners, that leaves us with big, huge opportunities moving forward. Moving forward, we also want to reach out to, what solutions we have for our focus as the Filipino Chamber of Commerce for Alberta, but also across Canada as Filipinos. The small and medium-sized business owners are our focus, and we're actually super lucky. So if you're here today, we get to hear from Rodel, who works with loans, who kind of formulates your proposals. And then we have Jasdeep from the BDC. He's worked his way up at the BDC. He's been there for over 6 years. I reached out to him and I knew he was right on the front lines. Again, like as they got the news, as we got the news on TV, he's getting the news from the government about the $5 billion for business relief. And I know he's super busy. Every day it's changing. So I'm really happy that he's able to be here with us today. And I'm going to move on to Jazz as he gives us some information from the BDC directly. Jazz, welcome.
Hey, thanks, Brian, for having me. And thanks, Mike and Rodel, for the information previous. And it's right, Brian was right. We had an announcement made, about 2 weeks ago on a $5 billion stimulus package through the BDC, and then $5 billion through our sister company, the EDC, the Export Development in Canada. Sorry, they help companies in Canada export internationally, and so the directive didn't come down for about a week and a half. We didn't know what we could do. Our only option up front was a 6-month principal postponement for our current clients. So for about a week, I was just getting calls, how can you help us? How can you help us? How can you help us? And my hands were tied because information is trickling down, and it was very slow and changing. As of today, we're not doing startups. I'll get into that, but I'm just gonna get into some numbers. If you guys have paper, pen, the stimulus package was announced. It's for working capital injections over $100,000. From $100,000 to $2 million. So this is for credit-worthy commercial clients. It's not a personal loan. BDC doesn't touch residential. We do just commercial. We deal with businesses, business entities and commercial entities. And by credit-worthy, I mean, we're looking at financial statements and clients that we would have approved. There were a strong business before. I've had people come to me that had, like let's say a 500, 600 credit, 610, who 2 months ago wouldn't have qualified for a BDC loan working capital. Now they're coming back saying, hey, well, there's this funding available, and that doesn't change it. That does not change our metrics and if we can and cannot lend. If you were not a strong business prior to, this is a business loan for commercial purposes. To bring a business to more stable times. So loans from 100,000 to 2 million, there's 2 exclusions. Number 1 is startups, and startups are defined by BDC as having less than 12 months of consecutive revenues. Number 2, the purpose of this loan cannot be for you to go purchase another business, a change of ownership. It's not for that purpose, and it's not for the purpose of paying out equity, taking out equity from your business. This is a cash injection, working capital injection into your business because you have been affected by COVID-19. It's unsecured debt. We do take a personal guarantee. By unsecured, I mean that we don't collateralize it against your home. It doesn't show up on your Equifax. You have a personal guarantee. We don't report to Equifax or the credit unions, so it's not tied to your home. If they do a credit pull, your personal guarantee is not tied to this debt. But we do take a personal guarantee just like any other business loan. The rate is very favorable right now. It is our base rate minus 1.75. So our base rate's different than the prime BDCs as a base rate, and that's at 5.05% right now. And you take 1.75 off of that. The current rate is 3.3%. And this is 3.3 unsecured capital injection into your business because you have been affected by COVID-19. And I want to touch on what Mike and Rodel said. Have your paperwork in order. Absolutely. I know some people, December is year end and accountants are busy and they're more busy now trying to deal with their clients and trying to assist them. But have your paperwork ready and in order in terms of financial statements. We do look for financial statements. We still do the same due diligence. It's just, it's a little bit more relaxed, I want to say. In terms of amortization, how this money gets paid back, our typical working capital loans are amortized over 6 years. Our typical loans for working capital through the regular BDC channel is we'll give you 12 months interest only upfront and then amortize it over 6 years. Under the COVID-19 relief program, it is 12 months, again, interest only upfront. 40% of your loan amortized over 2 years. And then the 60% is a balloon payment at the end of those 2 years. So what does that look like? Let's say you have a $100,000 loan. You need $100,000 working capital to get through this. Your business is shut down or reduced. You've got to lay off employees. Your suppliers aren't paying you. Your suppliers have closed their doors. You can't collect accounts receivables. You need working capital. And there is a light at the end of the tunnel because we are going to get through this. So, sorry, I forgot my point here. Sorry, it's $100,000, let's say. So capital injection, 12 months interest only. The $40,000 is amortized over 2 years. So $40,000 spread over 2 years, $20,000 a year in principal payments per year, and then a $60,000 balloon payment at the end. And that might seem really heavy and aggressive, and absolutely, I agree, especially with that $60,000 balloon payment at the end, or if you're taking out $200,000, the $120,000 balloon payment at the end. That is aggressive, but we're treating this as a step payment plan right now. BDC is very patient in terms of lending, and first, we will work on that 60% after. But this is to help clients say, hey, we're not going to amortize the full amount over 2 years. Let's amortize 40%. So what we look for is, again, you do need to have good credit. You would have to qualify as if you're qualifying for a regular loan. I had a client that got denied, I want to say about 4 weeks ago. And he came back and said, hey, Jess, can you help me out? I said, I can't. You don't fit the parameters. I am sorry. And that's what we're working with right now. Like Brian said, things are changing daily. So hopefully there's a little bit more directive later on as this carries on. But for right now, we do deal with businesses with, that we're a good business before. I'm doing a mortgage. I did a mortgage, sorry, for a lady who owns a beauty salon. She does lasers and all that good stuff. She got a $600,000 mortgage for a property downtown. I was looking at financing her second location for $850,000 before COVID-19 happened. And we're working on it. And then she came to me and said, Jazz, I have $100,000 locked into this that I would lose if we wouldn't get financing. Has this changed anything? Because my original business is closed. My original business that you used to spread the financials to finance my second location, which is essentially a startup, use those financials, but that business is closed. And my saying to her, and I talked to AVP Credit, is you were a strong business before. We were willing to support you, and we're still here to support you. That hasn't changed. We're not throwing down the gauntlet saying that we're not supporting you just because of COVID-19, but she was a strong business, and that's what we look for. In terms of startups, we do not do startups, and even for current clients at the moment. I have clients that are 8 months of revenues. I financed them 8 months ago, and this program does not fall under startups. So I have some clients looking at, hey, look, I have a daycare and I had to close my doors. Can you assist me? I gave them a 6-month interest only period for now, and that's all I can do in terms of assisting through COVID-19. That was the quick and dirty. I know there's gonna be a lot of questions. You know, we do send out, once I do get an email with somebody asking me for assistance with the COVID program, I send out a blanket email. It has a list of questions that we need answered. It is how have you been affected? Are you fully reduced? You're fully closed, reduced capacity? Have you talked to your other lenders? And that's very important. Like Rodel and Mike had said, talk to your lenders. And I know I work for a Crown corporation, but I don't know what's out there on the personal side either. I don't know what government initiatives are out there coming out every single day. Rodel just pointed out something today that I had no idea about on the personal mortgage side. So talk to your other lenders. Do you have a line of credit we request? How are your suppliers? Do you have enough supplies? If you had to order, are they shut down? How is your receivables collection going? Do you have a line of credit to draw on if needed? And so we ask these questions to all our clients that have been affected by COVID-19. So that was quick. I think I rambled a little bit, but I'll leave it at that, and then we'll do a Q&A.
Thanks, Jazz. Super helpful, good input, good insight. I'm going to open up the floor now. We're going to, if you see a mute button, you can unmute yourselves. In the next 25, 30 minutes, we'll have people chime in that wants to ask questions. I know we have a lot of small business owners here, and that's Jazz's specialty, senior account manager for small business at the BDC, so we can take advantage of that. Any questions?
Hi, Jazz. Wes Kowalchuk here. Hey, just thanks for that information. It was really great. One of the questions that I have, because I help small businesses as well, in addition to what BDC has, is there any other avenues that small business can take advantage of that can help carry them through this, other than, you know, some bridge financing or other debt like that? Is there anything that the government is actually doing to help?
And that's, oh, I'm not on mute. Okay, and that's one thing I'm not aware of, right? I deal with term debt. I deal with trying to assist clients and businesses through, you know, through term debt per se. It's amortized over X amount of periods. But my brother's a business owner. He's a small business owner, and you know, there's some initiatives. Like I said, I don't know what's coming through the pipeline from the government in terms of, you know, EI or EI for business owners, self-employed. You know what that looks like. But I believe there are some programs where I think it's $2,000 a month, but don't quote me on that. And I do get these kind of questions quite a bit because, you know, we're the government, as people like to look at us, but I'm sorry, I don't have too much on that. I think you froze.
You're good. Do you see, do we still have Wes? Does that answer the question? Well, yeah, I think
his screen froze, but yeah,
Okay.
I'm not up to date on the government initiatives that are coming out. Like Brian had said, we've been swamped with requests for financing, and that's exactly what I'm focused on right now. But if there's any initiatives through CRA, through your, you know, big banks regarding your mortgages or your business loans, definitely talk to them and take advantage of it.
Jazz and Rodel, how do you guys foresee the default rates happening in Alberta? You anticipate a lot of people declaring bankruptcy. I read the statistics, something about close to maybe 35% of people in the economy may declare bankruptcies. So are you anticipating higher default rates moving forward?
Do you want me to?
Either
From
way.
my perspective?
Yeah.
Rodel, you're still on mute for some reason, but yeah, absolutely. You know, during actually the last four years have been tough, and you've seen those bankruptcies on the commercial side and on the consumer side increase drastically. I used to work in special loans at BDC, and every bank has a special loans department. When business loans go to default, you go to special loans department. And I left that role about 2 years ago, and I thought we were busy 2 years ago when I left the role. they're slammed. They've been busier now than ever before, and that's been the story of Calgary for the last 2-3 years. The small business is resilient. You see businesses closing due to tough times and decisions out of the hands of the business itself. It could be a good business, but small business. It could be personal issues too that bring it down. But small business is resilient. I'm busy doing new loans all the time, so yeah.
Yeah, and I have to agree. Even prior to all this, I was seeing it too, both on the commercial side, consumer residential side. If it wasn't a bankruptcy, it was a consumer proposal. This has been happening for 4 or 5 years. Even any of the leads that I get for commercial financing, when I'm dissecting their business, everybody's running slim. Retained earnings, that doesn't even exist for a lot of these guys anymore. And they're drowning in debt. Businesses are drowning in debt. Consumers are drowning in debt. I think we're at what, $1 trillion of debt, right, in Canada. So I don't see that improving. I see more defaults happening for mortgage payments. And that's why if you can hold on to what you have in terms of cash, hold on to it.
Are you guys doing much factoring type products at all?
BDC doesn't do factoring, and we're not a full-fledged bank in the sense that we don't do line of credits, we don't do credit cards. We always want our clients to use their big banks and diversify their credit holdings. So, big banks will do line of credits, credit cards. Factoring is typically alternative financing that we see. But if you are looking to factor, in my opinion, what I've seen with small business owners and medium-sized businesses is it should be short-term.
Right.
It is, yeah, it should be short-term. It is not a long-term solution for your capital needs. Yeah.
Hey guys, I got a question here. So it's about deferrals. So in regards to deferrals, would that impact your credit score at all?
I'll take this. On the residential side, there is a possibility because the onus is actually on the lender to report payments to the credit bureaus. And so if you request for a payment deferral or skip a payment where the interest is added to the end of the term, you have to make sure and verify that they're reporting that to the credit bureau, because if they're not and you're getting late payments on your credit bureau, that won't be good. So on the credit bureaus, we have revolving credit, which are R's, so R1 to R9. And then we've also got I's, which are installment loans. And then we've got M's for mortgages. So if you have an M2 or an M1 on your credit bureau because your lender failed to report payment deferral, yeah, that's a big deal. Although I do think that if that does happen, they'll probably make an exception because, again, this is unprecedented territory. We've never gone through anything like this in the history of the world, right? But if you are looking to defer your mortgage payments, just try to get it at least in the form of an email from your lender saying that, yes, it's not going to affect your credit, and we do report payment deferrals to the credit bureaus because, yeah, it could. It is a possibility.
Awesome. Thank you.
Great question. I have a question here that I'm going to ask on behalf of Camille. She just has her kids with her, so she can't ask it on audio. Her question is, for small business loans, are there limitations to what businesses? Example, Airbnb style businesses. I guess that would be for BDC or Rodel, maybe you can chime in.
On the brokering side of mortgages, a lot of investors try to get those deals done on the residential side because residential money is a lot cheaper than commercial money. And any sort of Airbnb type purchase that will likely end up falling under commercial. So, sorry, what was the question again specifically, Brian, about it?
So the question was, for loans, are there limitations for an Airbnb business?
I think that's case by case. They'd have to look at who the borrower is, what loan to value, in other words, how much down payment are they putting down? And if it is being purchased as an Airbnb, kind of what is the exit strategy, after the term is up? So is there a limit? I don't know. It's tough to say. Maybe Jazz, what's your take on that?
Jazz, do you want to chime in? So let me unmute you here. There you go.
Yeah, absolutely. There's limitations to certain type of loans that, we don't do. I had a client that owns a hotel and, makes $6-7 million in revenues, but BDC doesn't have an appetite, right? Like, especially in Calgary, we don't have an appetite for hotels. 2 months ago, I wouldn't have financed a hotel. We have too many. There's too much of a supply. So he came now and said, "Hey, can we apply for this?" I said, "Well, we wouldn't have touched hotels in that industry prior to, so we wouldn't touch it now." In terms of Airbnb, you have a numbered company, let's say, and your business is not owning residential units. You don't own them, but your business is booking. You're a booking service. And you have financials. You have, let's say, 1 year financials. You could show that, this is what I made. These are my expenses. You have, decent credit. Absolutely, we could finance that. In terms of if you own an apartment building and, you had 30 units in it, we wouldn't do it. We don't touch residential. So in that case, we wouldn't do that. But Airbnb, if you are a booking service, absolutely.
And Brian, I think this is when you have to be a little bit more creative. So if you can't go through your traditional lending facilities, alternative lending, now would be a time to take a look at it. You could look at private borrowers. It all depends on what interest rate you're willing to pay to get that. I mean, right now you could pretty much get any type of money, but they may charge you up to 5% a month for short-term bridge finance, about 6 months to a year. So again, I think in this environment, money is there. It's just, what are you willing to pay, and can your cash flow pay for the cost of borrowing? So, a lot of these private lenders would take a look at the equity in the home, take a look at the credit quality. Actually, a lot of alternative investors don't even look at credit quality, because by the time you're looking at them, it's already assumed their credit isn't that great anyways. So it's not a big deal. It's more so they look at the fundamentals. They take a look at financials, cash flow, and it's just structuring a deal. I've seen situations where someone did a deal with a private lender. They hired an appraiser. The appraiser went through the house and said, "Well, your painting is worth this, your car is worth that, whatever, your piece of artwork is worth this," and they use that as collateral. A bank would never do that. Bank would likely just use an asset that can be sold quite easily, like real estate. But a private lender can say, "Well, you have a really nice watch collection, or maybe in Tita A's situation, nice shoe collection, and you could collateralize her Louis, and yeah, you can do that." So again, it's the creativity. I think now is a time where entrepreneurs have a license to be exceptionally creative. Like nothing is off board. I think Wes could probably talk about that. He's gone through stuff, and he's gone through some creative stuff as well.
Wes, do you want to jump on here, or?
Yeah, I'm just trying to unmute myself.
Okay, perfect.
Absolutely, I agree with Mike. More now than ever, business owners need to look at thinking outside the box, looking at different opportunities to create value for not only their customers, but for their community, right? And if you have any kind of a following, any kind of a customer base, now would be the time to create a following, create a tribe or a movement, if you will, to help support those customers and come up with solutions that will help them navigate this, this chaos. And by doing so, you're going to create an amazing amount of trust within your group of clients that they will help support you as you go through, as you navigate some of the chaos. And at the end of the day, if you're able to think outside the box and provide, like Mike said, some very creative solutions that allow you to, you know, maybe 2 months ago, you wouldn't even have thought of going down that avenue, but now you're looking, well, you know, if I pivot over here, we might be able to, you know, pick up another revenue stream that really supplements what we're doing. You know, why wouldn't you take advantage of that now? Very powerful. I think for you, I'm assuming everyone here, because they're part of the Filipino Chamber of Commerce, are all business owners. I hope every single one of you currently right now is doubling down on your marketing and your sales efforts, because if you're not, you're probably not going to survive this economic chaos that we're in. The ones that are, I follow Todd Herman. I don't know if any of you are familiar with Todd Herman. He's a high performance coach. He started out his career as a sports coach. He coached some really great hockey teams and stuff. And he's transitioned into coaching high performance business owners. And he self-quarantined himself last week, 2 weeks ago, I guess it was now. And he was doing some calls to existing businesses that were not his clients. And the reason why I bring this up, it's kind of gonna, you'll figure it out here in a minute. 2.2 million, I think, to $511 million in revenue these 29 CEOs were at. And he interviewed each one of them. He recorded their interviews and then had everything transcribed and then had their vocabulary, what's the word I'm looking for? What do you do when you analyze? That's a good, there it is. Sorry, brain fart. Had it analyzed, and those 29 business owners fell into 3 categories. And the worst category, based on the language they used, was the fearful CEO. And the fearful CEO is the kind that's stuck on the news, watching all the chaos as it's unfolding, and, you know, running around Chicken Little, the sky's falling. So they've stopped marketing, they've stopped advertising, they've probably even laid off some of their staff, and they're very scared of how this scenario is going to work out. And those CEOs, from some of the information I've gathered by listening to a number of podcasts and stuff from guys way more in the know than I am, you know, this is where the number of 30%, these guys are not going to survive this economy. They will go bankrupt. They'll go under. The next group of CEOs are a group of, we call them unchanged, and they're taking a wait and see approach. They're not, some of them may have bought into some of the conspiracy theory, like they're blowing this way out of proportion, you know, it's induced by the government, blah, blah, blah. And so they're kind of almost like business as usual, but they're taking a wait and see approach to see how everything plays out. And then there's the group of business owners like yourselves, I'm hoping, that are the strategic CEOs. And the strategic CEOs are looking at ways, how do I pivot in this scenario? How do I see the opportunity that's in this dark cloud? What can I do to not only, and this is where the winners are really going to come from, is what can I do to help support my community? What can I do to create abundance? What can I do to give back to help? Those business owners are the ones that I see and the ones that I work with that are going to not only sustain their businesses through this trial period, you know, with whatever lending they can get, and continue to marketing and advertising, but they will set themselves up for some amazing success once the new normal kind of shows up, because they will stand out as leaders in their field. They will stand out as humanitarians, and they will be standing out as real human beings that people want to be around. And those CEOs are going to be the winners of all of this, right? And I'm really hoping that you guys are in that bunch, and I'm sure you are because you're here tonight.
Thanks, Wes.
They give you some food for
Hi,
thought.
guys. Yeah, thank you, Wes.
I'm just going to give everyone a chance to leave if they need to. We want to pay respects to everyone's time. It's 1 hour in. We can continue the conversation. I'm gonna just invite those that are going to leave. If you want to continue the conversation, we're going to continue the conversation on the Filipino Chamber of Commerce of Alberta Facebook page. We'll have a thread that we can follow. We're also going to upload this video as long as we all approve it here. And that's where we're going to have a chance to connect and talk about new connections. But for now, I want to thank those that are going to leave. Thank you for coming. If you can stay, I have one question to ask for Jazz. I don't know if you need to leave right now. We have two questions to ask. So if you're still available, we can keep you on.
Well, I'm good.
I think
Okay.
A was trying to comment on something as well. She
Okay. Sure.
I just wanted to say that thank you, Wes, for those comments, and I really appreciate that. And you are correctly right. You are absolutely right. Now is the time for small businesses, for all actually business owners, to actually step up. Okay. Make yourself known that you are still around, that you are working, and you're trying your best. We're all trying our best to survive. Like, make yourself known that you are actually still in operation. Like, post your whatever you do, like I do. I do it myself. On the same token, if you can financially share your blessings out there in our community, do so even in such a little ways. Like, a lot of the people in FCCA are doing that, and I'm blessed to be part of that group. So really, guys, like, we all need to survive. We all need to help each other and be kind to each other. Like, I see my competitors so quiet out there. Like, you know, I mean, I'm friends with some of them, and I tell them, I send them messages, look, guys, you got to get yourself known out there, because I mean, these are my competitors. But because they're my friends, you know, I also tell them, says, you guys, you know, you got to let your clients know you're still out there, because they think that you've shut down. Like, if you're working off at home, then that's great, because we all need to stay home, but still be like, keep yourself busy, occupied. There's so many things to do out there, and community work, you can do that at home too. Like I said, if you have a little bit of spare, like financially able to, I mean, a few hundreds here and there will help the community. And trust me, community will remember you, will actually support you. Remember, your community is your greatest marketer, people. So don't forget them. Go to your clients, ask how they're doing and all that stuff. Keep in touch with them and really ask them how they're doing, and support their businesses by posting them on your website, personal website, company website, just so that they see that you support them. And trust me, they will remember you when we're back to our normal. So, I mean, you guys keep safe. I'll be here. I'll be listening.
Thank you today. So I'm going to end the recording here, but we can stay on. I might have to jump off in a bit.